Cash flow can help growing businesses thrive, and cash flow problems can kill a business that might otherwise survive. According to a recent study, 82% of business failures are due to poor cash management, and a majority of small business and medical and dental practice owners cite cash flow as the #1 thing that keeps them up at night worrying. Stay with me, and I'll show you how to prevent this from happening to your business or medical or dental practice, and hopefully get a good night's sleep with 10 cash flow truths to remember. Hi, I'm David Weiner, Mr. Cashflow, and I've dedicated my career to helping businesses and practices improve and protect their cash flow. If this is the first time we've met, I'm glad to meet you. Subscribe to this channel to get more information on all aspects of cash flow, and if this video is helpful to you, please smash that like button to let me know about it. If you have any questions or any comments, please leave them in the comments section below. I'll answer any questions personally. Here are my 10 cash flow truths. Number 1, profits aren't cash, they're accounting. And accounting is a lot more creative than you think. You can't pay bills with profits. If your business is showing a profit, good for you, but profits can lull you to sleep. If you pay your bills and your customers don't, it's suddenly business hell. You can make profits without making any money. Only keeping an eye on profits and not on cash flow is one of the big traps that you can fall into that could kill your business. Secondly, cash flow isn't intuitive. Don't try to do this in your head. Making the sales and booking the revenue doesn't necessarily mean you have the money. Some of it may come later. Some of it may come a lot later, and some may never pay you what they owe you at all. Incurring an expense doesn't necessarily mean you paid for it already, but you'll have to, and that's going to take cash. If you need inventory, it's usually bought and paid for and then stored until it becomes the cost of sales. Third, growth eats cash. It's a paradox. The best of times can be hiding the worst of times. One of the toughest years one of my clients had was when they doubled sales and almost went broke. They were building things 2 months in advance. They were getting the money from sales 6 months late. And growth, you add growth to that, and it can be a Trojan horse, hiding a problem inside a solution. Naturally, you want to grow. We all want to grow our businesses. But be careful, because growth costs cash, and that requires planning. It's a matter of working capital. The faster you grow, the more cash you need. Fourth, sometimes sales eats up cash. The simple view is that sales means money. But in many cases, it's just not that simple. You perform the service or deliver the goods along with an invoice, and they pay the invoice later. Again, sometimes much later, or maybe not at all. Sending out a monthly statement just doesn't work like it used to, so you wait. You don't want to run off a good customer or patient, but you can't afford to keep chasing the money. Let me know if this is your case. I can show you how to remedy this situation without hurting your sales or ruining your customer or patient relationships. Fifth, inventory also eats up cash. If your business carries an inventory, you have to buy your product or build it before you can sell it. Even if you put the product on your shelves and wait to sell it, your suppliers expect to get paid. Here's a simple rule of thumb. Every dollar you have in inventory is a dollar you don't have in cash. Number 6, working capital is your best survival strategy. Technically, working capital is an accounting term for what's left over when you subtract current liabilities from current assets. Practically, It's money in the bank that you use to pay your running costs and expenses and buy inventory while waiting to get paid by your businesses and your business customers. Seventh, accounts receivable can be a friend or a foe. See rule number 4 above. The money your customers owe you is called accounts receivable. Here's a shortcut to cash planning. Every dollar in accounts receivable is a dollar less cash. This is an area in which I work with my clients to solve. If you can inexpensively reduce your days in receivables without wasting staff time or alienating customers or patients, you can win this battle. Eighth, bankers hate surprises. Plan ahead. You get no brownie points for spontaneity when you deal with banks. If you see a growth spurt coming, a new product opportunity, or a problem with customers paying, the sooner you get to the bank armed with charts and a realistic plan, the better off you'll be. Funding or a credit line is much easier to acquire when you don't need it in preparation for the time when you do need it. Number 9, watch these important indicators. Days in receivables is a measure of how long you wait to get paid. Inventory turnover is a measure of how long your inventory sits on your working capital and clogs your cash flow. And payment days is how long you wait to pay your vendors. Always monitor these 3 vital signs of cash flow. Project them 12 months ahead and compare your plan to what actually happens. I recommend paying your bills on time, every time, but in time, not earlier than their terms allow. And number 10, if you're the exception rather than the rule, hooray for you. If all your customers pay you immediately when they buy from you and you don't buy things before you sell them, then you don't have to worry about some of these things. But also realize that you may be limiting your business by not offering patients and customers other ways to pay. It's a balancing act, and either way can work. You need to examine which option works best for your business. I hope this video has been helpful to you, and I'd like to be helpful to you as well. I'd like to offer you a no-cost, no-obligation cash flow checkup for your business or practice. Let's talk, and I can show you a few ways in which you can improve your cash flow quickly. Just contact me at the contact information in the description below, or leave me a comment in the comments section on how to contact you. Don't forget to subscribe to the channel for more help and hit that like button below. Cash flow strategies. After all, it's your money. Keep more of it.